Mr. Kush Bohra, founder of kushbohra.com. Thank you for joining us here on News 9 Kush. Nifty has pretty much retraced that 61.8% level of that entire fall from the record high of 22,124 to the recent low of about 21,137. Can this follow-on buying that we are seeing in the last couple of days take the index back to 22,000?
Hi, first up, a very good morning to you, to all the viewers, and it's a pleasure to be here as always. A simple one-word answer is yes. Look, last whole of January, when I mean, it's still not over, but every time I was, on this channel, I've maintained one thing that January is perhaps a consolidation month. It's a month where you should protect your capital because I see a fabulous and a bumper February and March panning out, and I think we're on course for that. Even if not in the calendar month, at least in the start of the series, the Feb series, Nifty has done wonders yesterday. I think this will continue. See, it's a very difficult thing to follow up a 400-point kind of a rally, on the index. So this consolidation is very much warranted. Plus today is the Fin Nifty expiry and then a couple of expiries going forward also, right?
Right.
That said, 2100, 21,850, once that is taken out, we are looking at not only 22,000, perhaps even 22,200 as the level on Nifty. So my suggestion would be, if you're looking at a more positional kind of a trade, don't be in a hurry to book out. The best way is to keep trailing your stop losses and ride this wave.
All right, and what helped, I think, markets yesterday was also the performance of the banking pack. That has been a laggard for the longest of times. The index on the whole has retraced about 23.6% of the levels from the record high to the recent low. But we are seeing some bit of a resistance build around that 45,500, 45,600 levels. And in fact, the index has turned negative this morning as well, right from those levels as we speak. So what's your view over there? Is Nifty bank out of the woods, or is 45,500, 600 the level that you are tracking?
No, I think you're spot on there when you say that, the resistance on the bank Nifty is pretty evident. I will just move the levels up. This morning in our advisory report, we've clearly mentioned that the resistance level for bank Nifty in the near term is 45,800. That's the level that we're looking at. But if you were to call the bank Nifty out of the woods, the level that I'm looking at is the 50-day moving average, which is 46,500. Now, I know it's about 1,000 to 1,200 points away, but that's the kind of move, the bank Nifty needs to make before we can even start calling that, the trend has perhaps changed, at least in the near term. Right now, the way we see it, bank Nifty, just play the range, 44,000 on the down, 44,400 on the downside and 45,800 on the upside is the range. It'll not be a bad idea to play this range, sell towards the higher end of the range and then buy again at the lower end. That's the way we're looking at it. For sure, bank Nifty is not out of the woods yet. One more reason why bank Nifty is not out of the woods, rather two reasons. One, the index itself and the HDFC Bank stock had gone into deep oversold territories and they've only seen a technical rebound, nothing more. Two, if you see the kind of shorts that were built on the bank Nifty between yesterday and today, there hasn't been a great deal of covering, and that is despite the kind of move that we saw in the index yesterday. So both the points are suggesting that even the short sellers don't yet believe that the worst is over for the bank Nifty. That said, we're looking at 45,800 as the first pit stop. And once that is taken out, 46,500. Once these levels are taken out, will we start considering any kind of long positions convincingly on the bank Nifty?
Good morning, Kush. I'll now drive your attention to the maker of Bingo chips and Gold Flake cigarettes, which posted their Q3 results recently. ITC Limited beat market expectations with almost a 10.75% rise in net profits. Revenue from operations grew only 2.23%, so they were subdued. When we look at the stock has given a gain of almost 30% over the last 1 year, and even when I look at it today it is down almost 6.68%. Now, what do you make of ITC stock right now? Good time to buy or just hold?
So, if I can counter question, what is the horizon that we're looking at? If you're looking at this from an investment perspective, see, remember, we need to make a portfolio for all seasons, isn't it? So, from an investment perspective, I think it's not a bad idea to, gradually accumulate ITC when it's on the way down. I mean, if you remember, the last time around, we were here, we've had a discussion or two about Reliance, and my view was always the same, that, a stock like Reliance, you keep accumulating, you start an SIP and you keep accumulating on dips. the view is very similar on a stock like ITC. If you need to make a portfolio for all seasons, then ITC from that perspective is, for sure a stock that you should keep adding on the downside. Now, technically, the stock is very close to its 200-day moving average. We know a slip below it could perhaps extend the fall, but 440 is a very strong support zone. So even if the 200-day moving average rather, where the stock is trading at currently is taken out, I think 440 will come in as a strong support. So from an investment perspective, for sure, keep accumulating this stock. Again, there'll be like a phase where in a quarter or two, and the stock will again rise and shoot up, and we'll consider this as a missed opportunity. And ITC was never a trader stock, right? So I don't think there is too much of a miss when it comes to the trading opportunities here.
Going by strictly the near term, do you expect it to touch its 52-week high of 499? Right now it's at around 447 in the near term.
No, I don't. In the near term, I don't. The reason being very simple. The entire FMCG pack is under pressure. The stock has actually been seeing a selling pressure, on every rise. If you see at every, 15 to 20 points that the stock has given a jump off, the stock's actually seen what we call as a lower high kind of a formation. So from that perspective, near term, I think 480 and the 500 levels are a bit of a stretch. Hence, more of an investment bet. I don't see that stock. I don't see this stock, hitting 480 or perhaps even 500, let's say in a quarter, or maybe even, a little over that.
All right, and another company that declared its results after the market hours yesterday was Bajaj Finance. And, I was looking at the numbers, they look healthy overall, a slight miss on the profitability front, but, asset quality has improved, unlike in the case of other NBFCs, AU Small Finance Bank comes to mind. But, the stock has taken a beating this morning, Kush, it's down somewhere around 4%. And I was reading some of the brokerage views. They are positive on the long-term prospects of the company, but what's the short-term view on Bajaj Finance? Is there more pain in the offing?
If we would have spoken before the market opened, irrespective of what the result was, my opinion would have been, and this is in the benefit of hindsight, but my opinion would have been, if there is any kind of rise in the stock, go ahead and sell it. Now, let me also give a very clear disclaimer that this is one of our favorite stocks and has been for years now. But we'll have to perhaps adapt with changing times. If you look at the high that the stock made, somewhere early October last year of about 8,200 odd, the stock's been slipping continuously, and there is a very clear shift, perhaps from Bajaj Finance, out from Bajaj Finance and perhaps, into Jio Finance. But if you just look at it independently also, I'm drawing a trend line, a downward sloping trend line. There was a brief phase of 5-7 days when the stock was up, but again, it's crashed and tumbled again. So from my perspective, I think it's a good idea to perhaps make that switch. The company keeps surprising from its business performance on the upside, but somehow it's not translating into stock price, and that's of course the proof of the pudding, right? So for me, there could be some downside. If you're looking at a fresh short selling opportunity, then I would suggest wait for the stock to perhaps bounce a little and then go ahead. But from an investment perspective, for now, I would say hold on. I mean, avoid putting in fresh money in Bajaj Finance.
All right, hold on, avoid putting fresh money in Bajaj Finance. But another stock that's doing fairly well, in fact doing brilliantly, is Reliance Industries. Now that had, the stock had one of its best days in 3 years. In fact, the best day in over 3 years since September of 2020. It was up somewhere around 7%, close to that 20 lakh crore market cap, seeing some bit of selling pressure this morning. But what's your assessment of the stock? 3,000, that looks pretty much done and dusted, isn't it?
I think this is a classic case in understanding how money is made in equity markets. You could stay invested for, an entire year, and perhaps, the last 5-7 days when you step out of the market, given your patience probably worn out, the markets will do its thing. So this is exactly, a case in point. We've always maintained a buy on Reliance no matter what the level was, right? And it did seem like a buying on dips kind of an opportunity every time, we got that dip. Just kind, the market, the stock, and, God has been kind to perhaps, validate that view. After yesterday's move, I still think Reliance is a buy, but if you're looking at it from a near-term perspective, give it time, probably a little dip towards 2800 or probably a little below that also might turn out to be a favorable buy from a risk reward standpoint. 3000 done and dusted, you're right. Perhaps 3150, 3200 are the levels that we should look at in the near term, and 2700, 2750 are a good support zone for the stock. So even close to those levels, I don't think getting into this stock should be a bad idea. So for me, Reliance is a clear buy on dips at the moment.
Okay, Kush, still a buy on Reliance, but what do you advise? What are your picks for the investors today?
Sure. So a couple of them, the ones that we had, today morning as part of our advisory service, Shriram Finance and BLS International. Now, incidentally, both the stocks have hit their first target. So for Shriram Finance, the targets were 2460 and 2525. Since the first target was hit, now our suggestion would be to hold on to this for a target of 2525, which is the second one. BLS International 2, 410 and 418, were the targets. The first target was hit. Now the second target comes into play. So the advice would be to be in this stock or perhaps initiate a fresh buy with a target of 418. So Shriram Finance and BLS International are the two stocks that we've recommended as a part of our advisory service also.
All right, Kush, and before we let you go, considering that volatility is elevated in the markets, what would be your advice for traders, the key do's and don'ts for budget day?
I think that's an excellent question. I'm so glad that you actually brought it up. Incidentally, if you see, the markets were up yesterday and so was the VIX. Now, a very simple example of that, which you already answered, is that, it's an event-led rise in the VIX. What usually happens is that, a lot of option buyers, especially the ones who come new to the market, will think that it's a big day, it's a big event, which, it might turn out to be. But they would perhaps think of a strategy like a long straddle or a long strangle, thinking either way the market goes, they'll still make money. But that's, the market's actually moved on from that, matured quite a lot. My sincere suggestion would be avoid buying options, from the perspective of the budget. Even if someone wants to do that, they should do it on an intraday basis, or perhaps implement such strategies once the budget is over and the VIX has cooled off. This will be a good opportunity for option sellers to pocket some money. But we don't usually recommend option selling strategies on air, because we all know it's a bit of a risky play, and the ones who've not probably dealt quite fairly in it might end up losing a lot more. So it's not a recommendation to sell options. It's just to say that this high VIX will play fairly in the hands of option sellers. So buyers should avoid buying options from the perspective of the budget. Play it intraday or play it after the event is over. And from a view perspective on the stock and the sectors, we think power, infrastructure, these are the stocks that could perhaps do well. So if someone wants to play, remain in these names.
All right, avoid buying options, and power infrastructure looks attractive on the budget day from a budget perspective. That's a view from Kush Bohra. Thank you, sir. Thank you for joining us here on News 9.
Always a pleasure. Have a great day.